JB here. Hope everyone's doing outstanding. On Wednesday, September 17th, 9:15 on this fine morning. Talk really quick about the markets. Some names I'm looking at go from there. Happy Fed Day for those who celebrate Fed meeting. Ends statement at 2:30, 2 o'clock, presser at 2:30. Much anticipated, right? A very long delay between the last Fed, and there's 6 week, most times they're 4 to 5 weeks, sometimes there's 6 weeks. But it's been a long delay because we've had two rounds of data in between those Fed meetings. So certainly going to be interesting. Market probability of about a 95% probability of one rate cut. You have a 5% probability of a jumbo cut. So you just hopefully they just stay the course. You get a 0.25% rate cut, and then the focus will be on the dissenters, right? So last meeting, no rate cut, but there were two dissenters. That hasn't happened in decades. So certainly want to see if there's dissenters. There might be dissenters on the quarter rate, uh, just a quarter rate cut because maybe they wanted the jumbo cut. So that'll be interesting. And then the dot plot, right? The how they figure the rates are going to be going forward over the next year and a half. So all those things will be under a microscope at 2 o'clock. See what changes from the statement from this months to last one. And then 2:30 is Fed Chair Powell, and I always talk about him walking that tightrope, right? Got to appease both sides. You can't be too hawkish, can't be too dovish. I think if he's able to walk that and kind of, I keep saying talk the rates down. If he's able to talk the rates down as opposed to having to be forced into doing a jumbo rate cut or being more aggressive, I think that'll bode well. Nice little chart here. Ryan Dietrich always has some good stuff, some historicals. I love historicals, right? Best indicator of future performance is past performance. So take a look at this chart. Take a look at the Fed cuts that have happened within 2% of all-time highs, and I think it's like 24, n equals 24, n equals 22, somewhere in there. 100% of the time, markets are higher a year later. So, I mean, obviously that's some time from now, but then you start looking at some of the close to time frames. Next month, about 66%. Next 3 months, about 75%. So, if you're someone who likes to flip the coin and give probabilities, probability the market's going to be higher after today's rate cut is pretty good. So, but there's always the exceptions. So hopefully we'll see if today's the exception. I talk about some concerns, right? And the first concern is yields, right? If the yields spike up and rally today, tomorrow, and Friday, to me that would be concerning, right? Even in the face of a rate cut. And then the VIX has been sticky, and some of it I chalk up to just some positioning ahead of the Fed, and it's like a 0.84% implied move for today on the S&P. So maybe that's some of it. I posted this morning to, 3 of the 4 sessions, the tightest trading ranges for 2025. 3 of the 4 have happened in September. September 15th, we had the 0.25% trading range. Mind-boggling. Right back on April 7th or 8th, it was a 10% trading range. So we are a far cry. How many days of 0.25% to get to 10%? I mean, was it 40? That's 40 sessions of volatility. If you use September 15th as kind of that standard, just remarkable stuff. All right, so that's overall market. Take a look at yields. It's the stories, right? The inverted yield curve was calling for that recession. I think Ryan Dietrich posted yesterday afternoon. 2022 was like Bloomberg, one of those saying, "Oh, we're in a recession," right? Calling for a recession. That never came to fruition, and some of it was all those bears and the folks who would do the fear, uncertainty, and doubt, saying inverted yield curve has predicted every recession, right? And it's funny, you can use that rationale to say every all-time high has preceded a recession. It's like whether it comes to fruition or not, just they could just say that, right? But you can use any catalyst. Oh, the sun rose, and that has happened before every recession. It sounds good, but again, you take everything with a grain of salt. Always good to look at the big picture. And to me, it's like, is the market 5 to 10% higher from here after the Fed cuts rates? To me, it's like hard to wrap my head around, especially off the rally, off the lows. But it's like maybe that's the exact reason why it's 10% to the upside, because it's like that's the one that just doesn't, that you would. But all right, rants for other days. All right, now just quick on individual names. First, just quick on GameStop. 8 sessions in a row to the upside. Hasn't done that in like 3 years. And to me, it's just like a matter of time before it gets some FOMO. Maybe I'm wrong. Take a look at gap fill from back in June after its earnings. 28. I think it's 28.24. Wouldn't be surprised to see that come quickly. The thing is trying to get in before premiums really start to surge. So my October strikes are up nice, over close to 50% or over 50%, depending on where we open here today. I might look to take some of those off and just roll into November 40s, because even if it doesn't get to 40 by November, if it does start to rally and gets into the 30s and low 30s in the coming week or two, those premiums are going to explode. So that's kind of the thought process there. I'm not going to go on a long rant on GameStop, but really like the setup here. Serve boring yesterday. Disappointing because it broke down all the way into the 1150, 1160 range, and it was like a rough session. And then you look, end of the day, it closes flat. So just would love to see it back over 13 bucks. Hopefully today's the day. Not going to add any more strikes just yet there. IIPR gapped, ran up to over 58 at the open. And then, I talk about mental energy. It's wasted a lot of time managing and watching this position. So I took some more of the October strikes off, a couple more for close to 300%. I'll just hold the rest of those. I was saying 57.50. I'd add more strikes. I'll probably be a little more patient. September 30th is the ex-divvy date, so no rush there. Reddit disappointing. It's disappointing when when it's up 1% and you're disappointed. That's trading options, right? Your stock is in the green, but your premiums haven't moved. So frustrating. I wouldn't even call it frustrating. It's actually a decent sign considering it's at all-time highs. I would love to see FOMO here. Eventually, it's going to be over 300 bucks. Just a matter of timing, right? And what typically will happen is Friday will come, options will expire, and then they'll soar on Monday over 300 bucks. That's simply how the market works, right? Uh, the thing is, the premiums are nuts, all the way up to 320 for next week. So I don't know if I'll wait till Thursday or Friday, depending on what it does to get some more strikes here, because I do want to be in for that move over 300 bucks. Lemonade, just like Reddit, up over 1% yesterday, but again, frustrating because premiums aren't moving on the calls. Still like this one for a move. 60.49 is the big handle. Also this morning, Piper Sandler came up, raised their price target to 60 from 55. They have it neutral rated. Last time when it was in the 30 bucks, some neutral rated or bearish analysts had a price target upgrade and the stock just took off. Would love to see some deja vu here. I don't think it'll take much for that to get going. Duolingo is actually lower here again in the pre-market, down 13 bucks. Needham came out this morning, reiterated their buy rating and like $450 price target somewhere in there. Nothing's changed, right? To me, it's just like one of those stories that it makes for very easy for folks to put a bearish spin on it. Similar to what they did with Google, right? With AI, similar to what they did with Reddit when Reddit was an 80 buck stock, right? Oh my God, AI is going to kill Reddit. It's done. And then sure enough, what happens? The story, that wasn't the story. And if anything, it's just created a monster opportunity. I don't know if the monster opportunity on Duolingo is at 267 right now. Is it at 240? Uh, Timing is going to be tough, and similar to Reddit, the premiums are pretty pricey. But at some point, I think that goes on a monster bounce. The thing is, they had earnings in August, monster earnings, beat and raise, stock all the way up into the 400s, and then it's just sold off because of that story. And hey, the market, like I keep saying, is the best forward-looking pricing mechanism on the planet. So maybe it's right and thinks that Duolingo is done, right? Their growth days are over. I don't think that's the case. So we'll see what happens. I'll continue to look for opportunities on that one. And then, hate to poke the bear or whatever they want to say, but gold, right? I mean, I was saying it yesterday too. It seems that everywhere I turn, someone else is saying, it used to be 4,005. Now people are just going off the rails on where gold is going to go. And I'm not saying maybe it does go to $5,000. I don't, I'm not going to be naive enough to think it doesn't, but I just think there's opportunity, right? So 3,700, I think it's 37 and change right now, 37.10 here. Could be an opportunity for a pull at some point. You saw Nugget, I always look at J Dust and Dust as some call plays as the miners sell off and gold sells off. But I think Nugget puts might be the better play. It's up at 125 and change, 130. So that coupled with GLD puts maybe. So we'll see what happens. But especially you've seen large swings in commodities, especially gold after the Fed meeting, post-Fed meeting, sometimes overnight. So I might just get some spec positions, right? Nothing expensive, because there's been some swings on 2, 3, 4%. And when you talk about 2, 3, 4% at 3,700, as opposed to where it was when it used to be 1,000 and 1,500 back in the day, those premiums will go bonkers. So anyway, let's have a great day, folks. I'll be back on audio later. Rock and roll.